Well, again, Mr. Chairman, thank you very much for your leadership on this issue and for holding this hearing, which is clearly a pressing issue, urgent and important for national security, for the unbanked, for personal privacy and civil liberties. A lot of issues covered today. So one final comment and then a question. The comment is, I think what we learned today was that Chairman Powell was absolutely right about getting this right as opposed to getting there first. I think there is urgency, and so I think we do need to move forward with urgency, but getting it right is so critically important. And I think we learned that there are some dangers associated with privacy, with manipulation of monetary policy. I appreciate my colleague from Massachusetts recognizing that this is blurring the lines, Dr. Coronado, between fiscal policy and monetary policy.
They've already been blurred.
And let me also just say, well, that's true. And I think we need to restore the Fed to be a monetary policy only and accountable. Yes, independent, but accountable to Congress. And Congress and the elected officials of this country should be the fiscal policy makers in this country. The other concern is the concern that the chairman just raised, and the possibility that this could get out of control to the point where a central bank digital currency is making an end run around the private commercial banking system. So what I have concluded is that direct Fed accounts is probably not the way to go. That two-tier is a if we're going to go in this direction for purposes of sanctions effectiveness, sanctions enforcement, for purposes of dealing with the competitiveness challenge from China and preserving the dollar as the world's reserve currency, if this is the direction we need to go to pursue and protect those ends, then we've got to be careful about making an end run around the private banking system, compromising privacy, and manipulating monetary policy in a way that irretrievably blurs the distinction between monetary policy and fiscal policy. And so I'll conclude with the question that I have for Mr. Baldwin. What is, in your view, the danger of the Fed holding so much consumer information if we move in this direction using accounts at the Fed as opposed to a two-tier system where you would have, to the extent that we move in the direction of a central bank digital currency, private sector control of wallets?
Across all financial services, I think the key thing that keeps everybody up at night is a wide-scale cyber attack. So anytime you're dealing with an account-based system that has everything in one centralized place, that's a prime target for nation-state cyber warfare. Disintermediating and having different troves of information potentially facilitated by the private sector makes it more difficult to go after one strategic source that would take down an entire system.
And do you believe that that's possible to do this, to set up a central bank digital currency that is sophisticated enough to guard against that kind of a threat?
An account-based approach would be traditional or similar to traditional banking. So there'd be wide-scale cyber implementations that need to occur. Something occurring on a ledger system, so a tokenized system, would have different security considerations, but blockchain technology, time and time again, has shown to be a very secure method of means of transfers of value.
Well, thank you all for your testimony. We clearly have more work to do on this, and that's why I endorse the legislation that Mr. Hill and our chairman have authored, and I do echo Mr. Hill's comments to encourage our chairman here to see if we can get some of these bills in a markup. So with that, thank you to all the witnesses for your important and illuminating testimony today, and